My name's Colin Jones. I run Outerlands Capital, which is a liquid digital asset manager. I'm sorry, my voice is a little shot right now, but I'm excited to be here. And there's over $100 billion in DeFi right now. I think most of us believe that's going to be 10 or 20x that in the next few years. So I think one of the big items that I think has been holding back the space, if you ask institutions, is the confidentiality and privacy, because they just don't want to operate on open, uncompliant ledgers. So we're going to investigate that today, because I think there are some solutions that everybody on stage here can share. So let's start with introductions. Rob, you want to kick it off?
Yeah, sure. Hey, everyone. I'm Rob Viglione, the CEO of Horizon Labs. We are a privacy infrastructure builder in this industry. So far, we've done that as the core builders of two projects. One is called Horizon, the old Zen Cash project that we're actually relaunching as a privacy layer on the base ecosystem. Again, we're going for a regulatory compliance angle, so very much a fan of everything that Howard just talked about on the last panel in terms of, I think compliance is going to be a big part of the privacy narrative. The other big thing that we do is just core your privacy infrastructure with zkVerify, so it's a modular chain for zk-proof verification. So those two things in combination, really, we just believe fundamentally in the rails of Web3 have to be upgraded substantially. And privacy, I think, is the end goal there, and I think privacy by default. But we have to just accept the reality that we're building in a world that has compliance requirements, regulations, enforcement, and things like that. So we're trying to do that.
We'll share. We're friends. We're good. So I'm Fahmi Syed, president of the Midnight Foundation. We're about to launch the Midnight Network. The Midnight Network is a new L1 that allows what we call rational privacy. So privacy is not about hiding things, it's about protecting your vulnerabilities. It's about protecting your assets, your income, your medical data. And Midnight, through its smart contract layer, enables proofs to be shared in a way that gates access to different transactions, different industries, different sectors. So I'm sure we'll talk more about it. But I agree the compliance layer is an important part. And again, we'll share many of those comments here today.
I am Bhaji Illuminati, CEO of Centrifuge. Centrifuge is a tokenization platform founded in 2017, so very early in the RWA space. Has evolved quite a bit over the years, focused on different asset classes, different use cases, have tested different iterations of privacy and what that means for our customers, both on the issuer side as well as the investor side. And today operate two businesses. One is a regulated asset manager called Anemoy, and then one is the horizontal infrastructure, which is Centrifuge. So privacy for us has different components, different requirements as it relates to the off-chain operations through the regulated fund versus the on-chain distribution and DeFi side of the work that we're doing. So happy to dig into that and generally learn a lot from this panel, as there's purpose-built solutions specifically for privacy. So I think ultimately on the fund side, there'll be likely many opportunities where we start relying on some of your guys' services.
Hi, I'm Howard. For those who saw me on the previous panel, I'm back. For those who haven't seen me, my background is that I'm the founder of Aleo. Aleo is a layer 1 blockchain, uses zero-knowledge proofs to enable private smart contracts, so effectively private applications with compliance.
Okay, great. Now that we're all mic'd up now. Maybe help the audience, let's frame the issue first, which is, why is confidentiality, privacy, whatever you want to call it, important for institutions to come on chain? It's not money laundering, it's not some of the things that might come to people's heads. So maybe help frame with some specific examples why an institution might need a private solution. So Fahmi, you want to?
Can I take that? So I spent over 20 years in the asset management industry, 17 years helping build one of the largest hedge funds in the world. We were one of the biggest equity traders globally. We could find price discovery, liquidity discovery, settle the trade, execute the trade, settle the trade, move margin. And that was myself, we knew, the counterparty knew, and the custodian knew. Try and do that on the blockchain. Everybody knows. There is no, your data, your execution, your portfolio is your secret sauce. Everything on a blockchain is visible. So we need to get to a place where people recognize that privacy gives people choice. It's an empowerment layer, not an obfuscation layer. Large transactions will not come, or large corporations will not come to blockchain without privacy. And blockchains weren't about launch a blockchain, launch a token, make some magic beans, drop down on it for yield, and then go to the next chain, which launches with magic beans. Blockchain was infrastructure, truth layers. And privacy is a truth layer that allows large corporations to come to and adopt blockchain technology.
Can I just add, personally, I'm tired of being scalped on my DeFi trades, but I'm not an institution, right? I'm just an individual, but it is annoying, and I think there's actually a real need there. Probably the one thing that I'll add specifically to that question is EY published a report last year that said something like 75% of institutions said their biggest barrier to coming on chain was data confidentiality. So just very clear friction in the market that we need to fix.
So technologically, how does that get solved? We have many solutions up here. Howard, do you want to start us off? Like, what are the technology solutions that can help enable the next wave of DeFi with institutions?
Pick me.
I think we may be a little bit biased on what we think the technology is. I think many of us believe in zero-knowledge proofs on this stage. But I think just to give a broader landscape of options, I also talked about this in the previous session, was that you have things like TEEs, you have things like zkPs, MPCs, FHEs, a lot of technical jargon. You basically have hardware-based approaches, you have multi-party-based approaches, and then you have cryptographic-based approaches. And each of them have different trade-offs. They have different trust assumptions. Some work better when you have full control over the hardware. Others work better when you have no control of the hardware. And I think that the solutions that are being built are all trying to address different needs. So for ZK, it's really about when you're on a permissionless open system where you don't necessarily know who the counterparty is, it's very useful to have ZK because you're going to publish information onto an open ledger that everyone can see. And when you're having it just out there in the open, you need to have full control over the data privacy assumptions of your transaction then. And so, zero-knowledge proofs are a great way to demonstrate privacy. It's also gotten a lot cheaper over the past decade. 10 years ago when zero-knowledge proofs started being used in blockchains, namely in Zcash, it used to take about 3 minutes on a laptop to generate one transaction, and your laptop would be crying at the end. Nowadays, you can do it in 3 seconds on your smartphone, and it's like a nothing. So the opportunity now is to actually enable and use zero-knowledge proofs for things much bigger than payments, enabling kind of general programmability. People are experimenting with it in the swaps case for DEXs, also even in machine learning use cases on device. The technology kind of has really blossomed from here.
Fahmi, you're itching to weigh in, I can tell.
Shall I say something? So we use zero-knowledge proofs at Midnight, but one of the things, and it's a permissionless network, but one of the things we've done and how we've constructed our network is that the proof creation sits with the client, not on our side of the firewall. So they own the data that comes onto chain as proof. It could be Web 2 data or Web 3 data. We're agnostic. The proof then presents onto our network. And then there's an ability for the individuals in the transaction then to determine who they share that with, when they share that, and how they share that. That's rational privacy, selective disclosure. And then that can also be permission others to view it in the sense that you might need your compliance team to look at the trade. That's fine. Why not? So you might need your tax accountant to have that information. But also in terms of creating transactions, we're talking about privacy layers in terms of DeFi rails. Think about collateral and how clunky transactions are today in Web3. Often your margin calls come in a way that your assets sit somewhere else, or you're underutilized, undercapitalized. Midnight has a way of providing proof of capital, proof of reserves, proof of collateral, which may lead to an efficient system. So these are permissioning. So you've got to build privacy with a disclosure layer that gives compliance, and we believe that's what we're building at Midnight.
Rob, you want to weigh in too?
Yeah, why not? I'll just keep saying ZK, right? ZK. I think that's the theme here, guys. We've been building in zk, my company, since 2016. Shortly after Zcash launched, we realized this is a phenomenal new technology. Let's expand this into the application domain. We were way too early. The tech was way too clunky back then, and like Howard said, my laptop was crying every time I would try to process a transaction. The state of tech today is there. Like, we're finally there, and I have to say, building all of these years, we've had kind of fits and starts and different kind of excitement periods. I think zk as a class of technology is finally there where it can really be useful, and there's a whole stack now for zk. You have specialized networks that actually facilitate generation of proofs. You have aggregation systems, so you can kind of make the proofs bundled and more efficient and less costly. And you have verification networks like zkVerify. Obviously, have to talk about that because now we have a fully integrated stack where we can do things in a modular, efficient way. And we're finally there as well in terms of like blending other pieces of technology. So I know there are other cryptographic standards out there. You've got FHE, seems super promising, but much slower, right, than zk. You've got hardware solutions, again, like Howard was mentioning. Like, I think sometimes it's really about form and function of like, what are you trying to do? And that would really dictate what type of technology you would use. But I'm super bullish on the zk stack now. I think we're finally there after all these years.
So on that, maybe can we address a little bit the benefits of an open private network, permissionless, as opposed to a private permission chain, because those solutions are out there as well and are well capitalized. So like, how do you see that evolving when you think about the permission versus permissionless world? So.
I mean, you're looking right at me, so I'll just answer real quick. But look, I think, guys, it was like early days of networking. You had all these internets, and people realized, well, networking is really important. Let's stand up our company internet. Everyone's on the internet today, right? So I think, again, form and function, it depends what you're trying to do. But what I find most interesting is just the public web of Web3 infrastructure and making that interoperable in interesting ways so that you can have composability, you could share liquidity, and you can actually do things together collectively for the world, right, versus kind of siloed networks. That said, there's definitely use cases and scenarios where you just need certain levels of permissions. I think what's interesting now is that we're actually getting good at configurability for again, like compliance and realizing that we operate in a world with regulations and nation states and things like that we have to care about if we're going to actually scale. So
you're asking about the difference between permissionless and private gated networks. Who in this audience has ever used BlackRock's Aladdin PMS? So when you sign up to using BlackRock systems, there's a chapter there where you have to agree that they might have access to your trades and information in your portfolio, and you trust that they won't use it internally for themselves, against you another way. Obviously, they're a regulated business. I'm not accusing them of any wrongdoing, but that's a level of trust. So when you go to a gated or a permission network, you're relying on the same level of trust. And again, correct me if I'm wrong, I thought blockchain was about decentralized truth. So why is there trust involved? So I just leave it at that. That I think is the differentiation. So Midnight, we believe about privacy around the proof creation, permissionless access, so anybody can participate, but because it's proof, your transactions, your secrets, your vulnerabilities remain private. That for us is a fundamental requirement in how we built our system.
I mean, I'll quickly add that, when I think about permission versus permissionless, it's really about establishing credible neutrality. When you have permission systems and you're trying to introduce privacy, the only way that has really been really carefully thought out is this idea of kind of creating data silos, that individual institutions will hold data amongst themselves and share it on an as-need basis. I don't think that is the version of blockchains that that I grew up with, or certain that I've come to use. And a big portion of that really comes down to the neutrality of the data itself, that you want to know that you have a checkpointed provenance of the information that everyone can agree to and that everyone is constantly agreeing to. That I think ultimately is where you're going to kind of see banks go is that they will start to use permissionless systems. There's been a lot of experimentation on permission systems, but if you really want this to be used in real-world finance, I really think you're going to need some credible neutral platform for people.
And for us, a lot of it too is the two sides of the work that we're doing. So we run the regulated fund. We're working with institutional asset managers who need that comfort level that that data is not being shared on chain. That goes through our fund admin. It all lives off chain. But they're focused on tokenization and they're interested in blockchain because of the open nature of it. So what can happen now that that asset is tokenized? How can it be used across DeFi? How can it integrate with different vault standards? How can it be used in lending markets as collateral and in exchanges as a way to trade into RWAs and earn yield on any idle cash? So the optionality of what's possible on chain, once we get past the diligence and the requirements of what's legally needed to get on chain, is the core of why we deeply believe in the permissionless systems and continuing to operate on permissionless chains, where we can realize the net added benefit of being on chain and integrating within DeFi.
Interesting. So on the RWA front, Bhaji, sitting at the epicenter there, is the confidentiality, the privacy, is that a big hurdle? Or what other hurdles might remain in getting those trillions of dollars of assets on chain, which will really open up the use cases in DeFi?
Right now, so much of it is still off-chain, and there's such clear requirements of how to be compliant off-chain. So someone comes to Centrifuge, they go to the app, they're interested in our AAA CLO fund, they click through, they do all of their onboarding with our fund admin that's based in the BVI, and the fund admin is owning and protecting that data. And from the institutional side, they know that we're following the required regulation and that we're fully compliant. And then from there, the investor address is anonymized and can be used on chain. So right now, that's enough. And I think that'll get us pretty far as an industry. Right now, we're at 30 billion for RWAs. We expect to grow probably to 100 million in the next 6 months. So the question is, how far do we get with the current duplication of efforts between off-chain and on-chain? And then as we start to build some of these service providers and these intermediaries and these processes, whether, broker-dealers, transfer agents, the fund admins, these processes natively on-chain, then we need to match that same securities requirements and regulations. So for the institutional managers we're talking to, the securities laws are very clear. And the way that we're solving for that is by keeping those processes off-chain for now. It hasn't been a huge blocker to growth, but I think a lot of the questions around further and more exponential growth within the ecosystem go from where right now we're just taking on-chain capital, bringing it off-chain. Ultimately, we need to take off-chain capital and bring it on-chain. So we'll start to incrementally build more and more of these processes on-chain, and then we'll start to have to rethink how we're ensuring that we're meeting the required regulations in a new and novel way.
Interesting. Are you finding that institutions are ready? I know we all travel around the globe going to these crypto conferences, meeting with institutions, trying to sell them on permissionless systems. Are they ready, and what are they waiting for? Because I feel like we've been saying the institutions are coming for years. Any conversations you've had recently? Maybe Fahmi, I'll start with you, with institutions that are open.
So institutions are looking at the space, both in terms of permission access. A lot of institutions have obviously gone into Canton, and that's been spoken about a lot today. We know that JP Morgan can access through their deposit program have allowed transactions with Ethereum chains. So they're accepting of permissionless access. I just want to go back to something that Bhaji said around KYC, KYB of her clients who onboard through the fund admin. That's an off-chain process, and then that allows them access to the token on-chain. Once, again, in my hedge fund days, every fund that I did, every broker that I used, Goldman's, Morgan Stanley, many others, I'd go through the same KYB exercise, same FATCA forms, same CRS forms, 8 times over, 9 times over. To your process, why can't that be presented as a proof, as a digital identity proof on the ZK network? Why can't that proof then exist in a way that doesn't matter which chain you use, the other chains, zk is never going to be the fastest network because of the amount of computation involved. I think we can all agree on that. But why can't it be your proof layer to access everything else? So Solana could become your order book. Use their DEX as your order book. Use Arbitrum, use any other chain for that fast transactional speed. But a zk layer, so I'm going to be biased and say Midnight, is where your proof sits, where your assets sit privately, through which you can provide, again, attestations of collateral to gain more lending and borrowing, attestation of who you are to give you accreditation to access different tokens. That's how the institutions should think about permissionless access, because they're already comfortable with transacting on Ethereum. We need to now get to a level where how does JP Morgan Connexus send information from their chain to a Goldman Sachs private chain? You need a proof layer in between as a meta chain to support that. So that's where I think the access and comfort around permissionless networks will come and grow.
I would just add, I think I agree with both of them in the sense that there are much smarter ways to implement KYC in DeFi. And I think we're in this very open experimentation phase right now where everyone is trying different ideas and nothing has become the canonical standard yet. KYC using zero knowledge proofs can enable verifiable credentials. That's something that is very powerful for DeFi because it means you don't need to broadcast and publish all of your personal details on chain. But by doing so, you still have to abide by the existing laws and regulations of the jurisdictions you're operating in. And the tech is kind of over here on the right, and the laws are over here still on the left, and they haven't really caught up. So for example, if you want to do on-chain KYC with verifiable credentials, you still have to keep a copy of all the users' data, like their passport, their information, their scans, you name it. Because if a regulator comes and says, I want to know XYZ, they have to be able to produce it. I think that when it comes to decentralized finance, there are much smarter ways to do that. And the tech has already shown that it's possible. But I don't think the regulation has gotten there. So to answer your question about some of the things that are holding back businesses, I think it's a combination of adoption of the technology, some of these new capabilities, but also actually updating the regulation to reflect reality of where we are today.
Okay, so if the institutions are ready and willing, is the technology there? Rob, you mentioned earlier that you were early in 2017. Are we still early? Is the technology actually there to accomplish the size and scale and speed that's necessary to move in the direction that we all want it to go?
I think so. I think we'll find out. And the only reason I'm hesitating is because you said size, scale, and speed. So we know in TradFi, obviously size, scale, and speed dwarfs what we do in Web3. I think from we're at an interesting intersection point where the tech kind of in its holistic sense is probably about there for chunking out a bunch of financial use cases, right? I think that where we are in terms of the delay is again on the regulatory side and government adoption, and I think that's been the key, and we're kind of guilty of that ourselves. We're kind of responsible for our own problems there, and that I'm co-founder of an old privacy coin, right, from 2017, and we didn't think at all about regulatory compliance. It was literally the Wild West, and I think we did it to ourselves. And then now, if this stuff's really going to scale, we actually have to take the regulatory environment very seriously, and then governments ultimately have to pass better legislation that facilitates what we're doing. And I think we're starting to get to that point. So I don't think it's really a tech problem. I think it's more of the confluence of these other factors that we're starting to see come together.
Yeah, I'd agree with that. And I agree with Howard said, it's not technology. Before it was technology. I think the world has caught up. Institutions are using the technology. So it's now about regulation and educating regulators. Through the financial crisis, we had to educate regulators not to penalize us, hedge fund people, because we're using leverage. Leverage, short selling aren't bad things. So we had to educate the regulators around those kind of things. And the same now applies to DeFi and technology around zk and how it sort of opens rails. So, look, I think compliance comes by being able to have privacy, zk privacy, zk proofs, but allowing smart contracts to open up that for gating transactions, gating opportunities, but also gating access to information that helps compliance parties. I think the benefit of proofs is if you've ever worked in any kind of company in the various privacy rules, being a data controller is expensive. People, lawyers, legal fees, compliance, regulatory fines. With ZK proofs, the burden of ownership moves to the corporate, the individual, the machine. And therefore, more and more corporates can use DeFi rails and ZK proofs to become data processors rather than data controllers, which reduces the burden and the costs and fines.
Regulatory clarity also creates opportunity to innovate. It creates structure in which existing companies can now adapt and evolve. So thinking about the ecosystem and the infrastructure that supports broader adoption on the institutional side, be it custodians and exchanges and the comfort level of the ability to grow once they do come on chain. So I think there's work that needs to be done as it relates to working with regulators to build systems around these processes, but then also creating comfort level for new builders to solve some of the gaps that we're seeing. So not necessarily can technology handle it right now, but do we have the infrastructure and the ecosystem and the comfort level more broadly to support the growth that we expect to see?
I was just going to do a shout out to the Blockchain Association. I don't know if anyone's here from there, but they actually do a phenomenal job interacting with the U.S. government. I was just in Capitol Hill last week with them, where they actually had a group of us come in and educate various offices in Congress about privacy technology. So I think there's actually an interest there. We have now an infrastructure as an industry to really get in there and tackle it.
That's good to hear. All right, in our last couple of minutes here, let's just do a speed round. Howard, let's start with you. What has to happen in the next 12 months to achieve all these goals that we want to see happening? Is it going to happen in the next 12 months? Is there going to be an unlock? What do you see on the horizon?
Yeah, well, I think right now privacy is having a lot of buzz, and I think one of the key things that's going to help to really drive adoption and utility around privacy tech is going to be private stable coins. This is a very clear area that people have realized finds product market fit. Like stable coins have gotten a lot of adoption, a lot of traction, but as businesses are starting to use it, they're also starting to realize some of the shortcomings of these transparent stable coins, namely that it reveals a lot of business data, a lot of sensitive information. Customers don't feel comfortable handing over their financial data effectively every time they transact. So I really think that when you look at this next year, private stablecoins are going to become a very big part of that conversation.
For us, it's via the on-ramp of tokenization. So we need to keep bringing new asset managers on chain, keep partnering with them to grow their funds, keep the microphone with Larry Fink talking about how tokenization is inevitable, and keep building in a compliant and safe and scalable way.
So the facetious answer to that is we have to launch. We have to be live. So that's important. I think our token launch is coming next month. We've had one of the largest airdrops in history. The appetite for privacy is there. We see that. What I would say, what needs to happen in the next 12 months is make it accessible. I think in blockchain technologies, blockchains as a whole, you have to own the technology to participate in the technology. Capacity, predictability, cost predictability aren't there because the very token you own as an investment in that chain is the very token you have to use to pay and cannibalize for those transactions. So one of the things that we've done at Midnight, beyond just look at privacy and making it programmable privacy, rational privacy, is build a tokenomics with the Midnight, which allows people to transact in a private, compliant way through the disclosures and the smart contract, but in a way you can consume that technology. You don't need to own Midnight to transact on Midnight. You can rent it, you can lease it. That makes it accessible. So suddenly you can build technologies elsewhere and consume Midnight's privacy-enabling solutions. And I'd encourage other chains to think about building infrastructure and not so focused on just token go up.
I'm going to say, I think over the next 12 months, probably the thing to pay attention for would be privacy platforms that try to bake in compliance tools. I think that's the thing that's different for me now after all of these years, and I think that's going to be kind of the next big step up. And you've got at least there's a handful of projects out there that are trying to tackle this problem. You've got a few of them here up on stage, but it's a really small market, guys. That's what I would pay attention to, and that to me is probably the next big unlock.
Okay, I think we're out of time, but thank you so much for listening and enjoyed this. So thank you so.
Thank you.
Thank you.